I have watched smart, hardworking people buy a home at the wrong time and lose tens of thousands of dollars. In 2025, the risks are much higher than ever. Let me show you how to avoid before you buy anything. They say that homeownerships build wealth, but moving on, it could just destroy your wealth. This market is a different market now. Home prices are still high, interest rates are still high, inflation is still high, and buyers seem to be walking into a financial situation that they could trap them for 30 years. You see, now, just because you qualify for a loan for a certain amount doesn't mean that you should buy it or doesn't mean that you can actually afford it. The thing is, if you're thinking about buying a house 2025 onwards, this is May 2025, there should be three considerations that you should make. First of all, should you buy now? And then ask yourself, are you stretching to buy a house? And we'll talk about this in more detail. The second thing is, should you buy a house less than what you can afford or less than what the lender has approved you for? And the third scenario that you have to think about is, am I really ready to buy a house or should I wait and see? Not wait for the market, but wait for your situation and then decide when to buy. Let's talk about those right now. Now, you may also be one of those buyers where you heard from your lender or your realtor or some other people, hey, don't worry, buy it at $400,000, buy it at 7%. When the rates drop to 5.5%, you can refinance and your payment will drop. Nope, that's a no no. First of all, we don't know if they're going to drop. There's no reasoning for it to drop. And what if they don't drop? So you're gambling your money, you're gambling 30 years of payments. Do you really want to do that? Lenders and realtors say it all the time. They should not be saying that at all. So don't buy that story at all. If you're buying something right now, if you cannot afford that interest payment, don't expect for the rate to drop and refinance. And the problem with refinance is, what if the rates do drop in 3 years? Let's say they drop to 5%. But two or three things can happen. Number one, the home prices may go down. So the $400,000 house that you bought is now worth 350. And when you go refinance, and if you did not put enough down payment, you cannot refinance because they only refinance 75 to 80% or so of your home loan, of your house value. So check with your lender. I'm not a lender. Check with them. The other thing is, maybe you have a job right now, and when the rates drop, let's say they did drop to 5% next year. What if you lost your job, or if you're married, you both lost your job and now you cannot qualify, or your credit got ruined, something happened with your credit, you cannot refinance. So now you're stuck for 30 years with the current high prices and the current high rates. So don't gamble, please. One thing you have to keep in mind, more stressful, more dangerous than being in a financial trap is being in an emotional trap. I've sold a lot of homes. Luckily, a lot of my buyers are sound, but I've seen other home buyers buy and they are under financial stress, which causes emotional stress, which causes medical stress, and that causes relationship stress. And your life is a mess because you rush to buy a house. That's a no no. I'll give you my example. I had bought a house back in 96 and in 2008 the market crashed. So I was doing until then I was making all the payments, but I had the first loan and I had a second loan because I had borrowed some money to invest in a property. And then I had four car payments, two kids in college, two cars. And then the market crashed. So my income went from here to one third of what I was making and my expenses kept up. So I was under a lot of stress for 3 years. I lost all my savings income. Luckily, I did not lose my house. Luckily, I did not lose my wife. I know a lot of realtors and a lot of other people. Not only did they lose their cars and homes and relationships, luckily, I was not one of those, but I did go through a really, really high financial stress because my income dropped and then my payments were high because I had borrowed money to make an investment. So I was one of the lucky ones who came out ahead without losing anything, but that stress caused a lot of tension between my wife and my kids and my colleagues, and including my business. So I've seen it firsthand, and believe me, that could happen to you. So be forewarned. Be careful when you buy, how much you buy. And one of the biggest reasons I wanted to discuss about how if you're a buyer, you should wait and not jump into it is because I already mentioned that your principal and interest is fixed, but your tax and insurance are not fixed. They will go up, they have gone up, and they're going to keep going up. But here are some external factors starting 2025, including starting with the new administration, new laws, new things coming up, where your payment will go up for sure. One thing is, of course, insurance spike we talked about. The other thing is, depending on what county and state you are in, your properties are going up. In some places, doubling and tripling, like Florida and Texas and other states. The other thing is, the job market right now is not what it used to be like 1 or 2 or 3 years. We are hearing a lot of job losses or job market uncertainty. Google, Microsoft, Walmart, Apple, and a lot of other non tech companies, they are all planning on laying off. Microsoft just announced a 3% unemployment drop or non hiring. So, what if you are one of those? So, be cautious. How sound is your job? The other thing that's happening is the lending standards are getting very tough. They were eased up, now they're getting tough. So, after you buy a house, and let's say after 2 or 3 years, you have some stress about keeping up with the payments and you decide to sell. Well, the market may slow down because the lenders are very tight, just like they were in 2011, 2012, 2013 after the recession. So the buyer who may want to buy a house cannot qualify for a house. So you may not be able to sell your house. So that's a concern that you want to consider. The other thing to consider is we have a lot of high tariffs out there. The tariffs are put on, the tariffs are canceled. The tariffs are put on, the tariffs are canceled. The way I think about it, tariffs are here, prices have already gone up, and prices are going to keep going up. In other words, and I'm not trying to be negative, I'm trying to give you some information. Everything is going up. On top of your PITI going up and your homeowners association going up, your utilities will go up. Your diapers will go up. Your groceries are going up. Your Hulu account, your Netflix account, your telephone accounts, your internet accounts, everything's going to go up. So that $3,500 a payment is sure going to look like a $5,000 a month payment. So keep those things in mind when you buy a house. And the other thing is, we don't know where inflation is going. Is it going to be stable or is it not going to be stable? And once the inflation goes up, everything else goes up. That affects your pocket. One thing I did not mention, which is very, very, very important, or two things, especially if you're a senior and buying a house, or if you're over 62 and buying a house, there's talks about social security cuts. And I know a lot of seniors are buying, a lot of homes are being bought by boomers, and they have fixed income. So if the social security gets cut, that'll affect your payments. The other thing, the number one thing I want to mention is that of all the things that going high on top of the property tax and your insurance is your medical cost going sky high, your medical premiums going sky high. Be prepared, even though those do not count in your qualification. If you have high medical bills or parents or kids, factor those costs in. Nobody does that, and they should. Let us know in the comments if you're thinking about buying, what is stopping you or what would stop you, or are you going to go ahead with purchase or not? Here's what I would ask my buyer if I'm helping them, or a friend who's thinking about buying a house and say, hey, Mike, should I buy now or wait? My first question is, you can buy now if you are ready, willing, and able to buy. You are not stretching to make the payments. And more important than those things, I would ask them is, are you planning on staying in the house from 7 to 10 to 15 years? Then go ahead and buy. Because what if the market drops? We have seen the market go up and up and up and up since 2010. It has never happened in the history. It's almost 2026. That is 16 years up. What if the home prices keep going down? And usually the cycle is 5 to 7 years. What if the home prices kept going down after you bought? Let's say it's 2025 and it kept going down for 5 years, 6 years, 7 years, 8 years. That means a house that was worth $400,000 could be worth 350 or even 300. And if your loan amount is more than 300 or your loan amount is more than $350,000, how are you going to sell? Because you just lost that equity because the prices drop. So you don't know what's going to happen with the market. So be prepared to make those 30 payments. You are highly confident that even with a slight increase in the mortgage payments, you are ready to go. And if the market drops, you're not going to panic. Oh my God, my house was worth 400. Now it's 350. I'm going to sell. No, let it be 350. Let it go down. Let it even go down to 320. Who cares? Because if you're going to stay there long term, it'll be back up to 400. And hopefully, statistically, homes double and triple every 10, 15, 20 years, depending on your area. So hopefully your house that you buy for 400, and if you stay there for a long time, it'll be what, 600, 700, $800,000, or even over $1 million when you retire. So you have a wealth when you retire. You have built wealth because you made a sound decision when you bought your house. I'm going to give you one last point, but before I do that, watch this video YouTube is recommending for you to watch. So the last point is, are you buying a house or are you gambling on appreciation of the house?